Thomson Reuters is a big data company. And we've been in the big data business for a number of years. But interesting, some of the most exciting innovations are taking place outside the firm, where industries and supply chains are being redefined, and we've heard quite a lot about that this morning. Old school business processes challenged, and whole new propositions are creating and growing new markets. Many of you will have heard about and maybe even read Jamie Dimon's letter to shareholders a few months ago. He says under the title, Silicon Valley is Coming, there are hundreds of startups with a lot of brains and money working on various alternatives to traditional banking. The ones you read about most are in the lending business, whereby the firms can lend to individuals and small businesses very quickly, and these entities believe effectively by using big data to enhance credit underwriting. They're very good at reducing the pain points in that they can make loans in minutes, which might take banks weeks. I think Silicon Valley has come already. We're hearing about 2.0. And while JP Morgan is today an important customer of ours, we recognize the need to embrace and support this important trend. After all, our most important customers in 10 years may not be the most important customers today. That's why we dipped our toes in with the announcement that working with Crowdnetic, we will leverage our openly licensed PermID identifier to help the industry keep track of transactions across the industry. It's the first, well, perhaps the second, if you count this conference, of a number of steps we're looking at. Okay, let's get to the panelists. I thought we'd start with some general questions for all the panelists, and perhaps as you answer the first question, you could just give us your profile of your company and what you do in the company. Okay, so the first question, perhaps we can start with Aimee from SoFi at the end. How has big data enabled your business to challenge the incumbents in the marketplace?
Thanks, Tim. Hi, I'm Aimee Young. I'm the Chief Marketing Officer at SoFi. We're the second largest marketplace lender today. We've just passed over $4 billion in loans originated since our founding. And we're focused on providing private bank-like services to early-stage professionals. We started out in student loan refinancing and have since grown our businesses into mortgage refinancing, and personal loans. And that's really been enabled by big data. So one way that we leverage big data is in our underwriting. We don't think that FICO is a particularly good measure of risk, so we have a more holistic approach. We look at things like employment history and education, monthly income versus expenses, to be able to offer products and services that other lenders can't provide. That's allowed us, our super prime borrowers then, and the seasoning of those loans, has allowed us to continually scale the business and get more access to capital.
Mike, do you want to go ahead?
Michael Rodgers. I work in corporate venture capital at Credit Suisse, make strategic investments on behalf of the bank, anywhere from early to middle stage companies, and large enterprise technology that the bank consumes, or things that in the fintech space, specifically around investment banking, private banking, and asset management, where the firm has its largest footprint. As far as the question, I am one of the incumbents, so I can't answer too specifically, but I guess I would say the incumbents definitely are learning a thing or two from some of the new players. As far as the use of big data in the underwriting process, how quickly they can do that, how user-friendly the experience is. It's certainly taking note, and then also use cases around, lowering the customer acquisition cost as well. Find very interesting.
My name is Rohit. My name is Rohit, and I'm co-founder of Biz2Credit. So Biz2Credit, we started in 2007, so we are one of the very few marketplaces which were there prior to the recession. And I think big data is very interesting. We have seen the evolution of that, especially in the SMB space, where advent of smartphones and iPads actually changed the whole industry. Earlier business owners were not online, and they didn't have a lot of data which was even online. And what we have seen over last, especially 3 years, is that, more and more credit-worthy businesses are moving online. And as Aimee also said, we are looking, because most of the small business lending also in this country has happened either via FICO score or looking at the hard assets behind the business. And that takes a pretty long time. An average SBA loan can take anywhere between 90 to 120 days and extremely expensive to administer. So what we have done over the years is that we have incorporated data from various sources, including their cash flow, their revenue analysis. We have built pipelines into IRS. We have built pipelines into their payroll, into their payment data. And what we have seen now is that, we have a portfolio lending that we have done as a marketplace of over now 1.3 billion, is that the default rates are less than 1%. And more than that, what we have seen is that you get early alerts with big data. And I think that's the key, that when the businesses are facing a stress, whether that stress is going to lead to a default or a slow payer, and then how you actually allocate or remodel your credit scoring models, because that have to be done in a pretty real-time basis. And I think by looking at traditional sources of data, that still includes FICO and your cash flow and revenue, but then looking at some new data and obviously how you mix and match it is the key. And I think what we have also done is that we have a virtual CFO tool, which every business owner who comes on our platform gets that, irrespective of the fact whether they get the money or not. And that's pretty, good use of big data, because we can see the borrowers that we couldn't fund earlier, what is happening to them, what is happening to them over a life cycle. And the borrowers, obviously, which we have funded, we have a lot more data on them. And that becomes a very interesting benchmark also. And what we are seeing is, more lenders, including banks, are now coming around and saying that, looking at FICO is not the only way, and they have to look beyond it. And I think big data brings speed, but it also brings more transparency, which I think is the most critical piece in this whole, say, jigsaw puzzle of lending money, but also keeping your defaults lower than traditional lenders out there.
Hi, I'm Mike Armstrong, president of ZestFinance. We're a Los Angeles-based financial technology company. Over the past 5 years, we've built a big data machine learning technology that is far more accurate in predicting whether or not a consumer will actually pay back their loan. Our technology is highly technical. We run 12 machine learning models in parallel. Those models scour tens of thousands of variables looking for signal, and the net result is our models are far more powerful in predicting likelihood to repay. We use that technology to make loans to hardworking middle-class Americans who otherwise are overlooked by the banks and are in fact denied credit by them in way too many cases. We also license our technology to other companies in a variety of industries.
Hi, I'm Kathryn, Petralia, founder and CEO of Kabbage. I'm not going to share. All right, Kathryn Petralia, co-founder and CEO of Kabbage. We provide small business and consumer loans using an automated technology platform that allows our customers to share with us real-time access to data they use to manage their businesses and their personal finance. Most of our business is focused on small business borrowing. So our customers on average spend about 7 minutes on the site from the time they land on the site until they actually have access to capital. What this means is not that the decision happens in 7 minutes. It means the entire interaction occurs over a 7-minute period. And so our customers log into third-party data sources, grant us real-time access to that information that we then use to make a lot of decisions about those borrowers. And we've been doing this for about 4.5 years. We'll put out over $1 billion in 2015 to small businesses predominantly. And we've amassed a lot of data. So we've got about 25 terabytes of data about our customers, which doesn't mean much, it just means a lot of data. But what we're doing is our data science team is constantly culling that data to identify interesting attributes and variables that we can use to fold into the model. So when you're providing lines of credit to small businesses, it's very important that you not only have good data up front, but that you maintain access to quality, accurate data, continue to make decisions about these businesses as they grow.
Brilliant, thanks, Kathryn. So Michael mentioned that the incumbents are waking up. So my next question is, how do each of you, I'll excuse you, Michael, if you want, how do you stay ahead of the curve? I mean, you've got a lead on the big guys. The big guys have got lots of legacy, but they seem to be waking up and they've got deep pockets. Should we keep going in that order?
Sure. So I think we're seeing 3 stages of big data usage in marketplace lending. The first is really, as Kathryn and others have mentioned, is the building and refinement of your underwriting model to improve your assessment of risk. The second really that's emerged is using that data to then go out and target and acquire customers to find those very creditworthy customers that your model's identified. And really the third phase, which I think is most exciting, is what's emerging today, is actually using big data to better refine the customer journey and experience. So at SoFi, we're focused on building a lifetime relationship with our early career professionals. And that means offering the right product and the right service at the right time. So we're focused on leveraging data in new ways to better deliver exceptional experiences that result in a long lifetime relationship. And I would add, I think that traditional financial institutions are very invested in better leveraging their data, and of course, have invested hundreds of millions of dollars in beginning to leverage data for things like customer journeys. So being agile and moving quickly will help drive success in this space.
Rohit?
Yeah, so I think what big data is doing is, and we have seen it, when we started the company, most of the customers who used to come to us, more than 80%, and we used to ask them that question, have they gone to their bank? And they used to say that, yeah, my bank didn't want to do my deal, or I didn't have, or I've lost my relationship manager. So this was somewhere in 2008, 2009, when a lot of banks were going through restructuring. When we do these surveys today, more than 85% of the customers are saying that, we first want to go online and check our options before we even want to go to our neighborhood bank, kind of stuff. So I think that mindset has changed quite a bit. And we have seen that, our average portfolio, we have seen where customers are almost 5 to 7 years in business, 1.8, 1.9 million in revenue, 698 FICO score. So the whole idea of, big data is what we are seeing is moving into what we call version 2.0. And recently we did a partnership with the US Treasury and Citibank and actually launched something known as DC Small Biz Loans. And that's a very interesting concept that we came up for small businesses based in greater Washington, DC area, which are having very hard time to get any bank financing. And this is where, Treasury and Citi have white labeled our platform and data science and said that, they will, so Treasury is making the loans and Citi is actually footing all the bill for the technology as well as data science behind it. And the whole idea is that once these loans are made, what impact it creates, how many jobs have been added, created, what new contracts could these businesses bid for. So the idea is that, now you can use marketplaces not just for originating customers, but also doing the impact analysis. And that's good because, the stakeholders can get a better feel of, how their money is being put to use, which I think is extremely important. And I think what we are starting to see is more banks coming and wanting white label, not just of the platform, but also around the data. And I think that's getting more critical because if we can have all the data in one place and can constantly analyze it. The monitoring piece is key because that is very expensive in the offline environment. So if you can monitor it, if you can provide them with different products during their life cycle, as SoFi does with student loans and then goes into mortgages, we do with working capital, with CRE, with equipment financing. So the whole idea is that you can actually build a better lifetime value of the customer, and you can also get a very high repeat rate. And also you can build a lot of predictability. That, when a customer comes in and they borrow money, what's the next product they will take, at what time they will take. And that, I think, lowers the cost of acquisition in the long term. That also gives you a lot more market intelligence, which normally you won't get if you are, in an offline environment. And even if you're using big data, you are in silos. So I think that's something very critical that we are seeing. The evolution of marketplaces is going to get even, and there'll be more partnerships between traditional banks and marketplaces going forward that we're already starting to see happening,
So I would say one of the biggest advantages a company like ZestFinance has is that big data, analytics, and machine learning are the most core and central piece of our DNA. And just to draw this out against one of the competitors, and not to poke fun at anybody, but maybe find a little humor, I am a personal banking customer of a large West Coast bank. And given all the data that they're sitting on, one of their applications of big data is in my birthday month, when I go to the ATM, they wish me happy birthday. And so I think that Aimee outlined pretty well how the journey of how big data will continue to improve lending companies like ZestFinance and SoFi. We get better at underwriting when we get more performance data. And so as we collect more rows of data, our training data sets are a whole lot better. We continue to be able to attract the world-class machine learning talent, which is very rare and very hard to come by, and companies need to be able to track that. That's on the underwriting side. On the marketing side, we've had huge success leveraging big data machine learning modeling in our marketing efforts. In one of our businesses, we drive acquisition costs at 25 to 35% of the rate of other competitors in the space. And I just want to highlight the last piece, and Aimee teed this up. It's around customer experience. And machines can do a whole lot of work so long as they know what to do. And of course, that's the whole gist of machine learning data underwriting. And there was a speaker earlier this morning who sort of threw out and predicted the future of, at some point there will be single-click loans. And we agree with that. We think that the future could be sooner rather than later, but there are technologies out there, and we're pushing on them very hard to weed out fraud in very powerful ways, to do all the underwriting, to do a whole bunch of work so that the customers don't have to. And again, we think that's a pretty exciting future.
If you ask the big banks, who most of us were 5 years ago, they wouldn't have had any idea, they wouldn't have thought it was important, they wouldn't have cared, and now I think you're seeing a much greater interest in the space, not just those of us on the panel, but I think a lot of the businesses in our industry. And it's fascinating. I sat at this Treasury event next to the head of one of the largest banking lobbies in the country, and the comment was that banks just want to level the playing field. And I thought, that's really interesting, level the playing field. You guys have the cheapest money, you already have customers, I don't understand this leveling of the playing field thing, and what they realize is they can't move quickly enough to keep up with the market. So we always joke that we're in the world's second oldest profession. And what's interesting is that our customers weren't being served. I'm not competing with the banks for these customers. You're talking about businesses that are generating less than, or they're requiring less than $100,000, and it's very difficult for a bank to do that cost effectively. It just costs them too much to originate that loan. So through the use of this data, we're able to serve a segment that frankly wasn't being served at all, or was being served, I would say, very spottily. So the importance of this data is that it allows us to identify really good customers that a bank wouldn't have thought was a good customer. And I'll give you an example. We actually use social data. We use Facebook information. It's supplemental data to understand some of the ways our customers interact with their customers. And it turns out that our customers who give us access to active Facebook fan pages, their business Facebook accounts, are 20% less likely to be delinquent. We didn't know why that was. We did some research, and it turns out they're just running better businesses because they're engaged with their customers. And our data science team built a model using only Facebook data that outperformed our FICO-only model. Now, we don't use either one of those models independently. We layer them with other data. But I think, being open-minded to using other data sources, whether it's shipping data or social data or payment processing data or accounting data, I think that's what gives all of us an advantage, and it's difficult for the banks to move quickly enough.
That's great, thank you. That's so a whole mix of different strategies. I wouldn't like to be in Jamie Dimon's shoes at the moment. So let's ask some specific questions of the panelists, and then if we have time, I think we'll have a bit of time for some audience questions. Mike, ZestFinance, you announced a partnership or deal with JD.com in China, which suggests that your technology transfers across borders. Can you talk a bit about that?
Sure. So JD.com is one of the leading e-tailers out in China. Obviously a very large market, and they have a huge customer franchise. They had a very small lending program. They talked to a whole bunch of different financial technology companies trying to find an underwriting partner that would help them expand their lending program, and they chose Zest. So we've been working with JD now, JD.com, for about a year. In China, there's all kinds of consumers, but mostly it's been cash-driven. There hasn't been a lot of credit, so there's not a lot of performance data or credit infrastructure around credit bureaus and the like. And so What our technology is able to do is make use of all data that is available, and some of the richest data is the data that some of these e-tailers have on their customers. And so what we found partnering with JD.com is taking a look at all their consumer data, from shopping behavior to recent purchase to what categories they visit, the frequency, the patterns, time of day, payment and delivery information. We're able to use all that JD.com information and create credit models that have been pretty powerful in predicting credit risk. And that allows JD.com to expand their credit program to more and more customers. And then the other vector with this joint venture with JD.com, we believe we can create a sort of FICO score for China and offer that in the marketplace to other companies who want to also offer lending programs to their customers.
Great, thanks, Mike. Aimee from SoFi, we started to hear about how you're thinking about the customer journey. Can you talk a little bit more specifically about the role that data plays in that and where you're sourcing that data from?
Absolutely. So as we've expanded dramatically from our base of student loan refinancing into products that address the next major milestones in a consumer's life, of course, things like buying a first home, refinancing that home, paying down credit card debt with personal loans, and of course, we have a very bold roadmap moving forward. We're looking at data, both third-party and our own data, to better understand when those life stages occur. And at the same time, I would argue, we're also very cognizant that data isn't enough. So it's one thing to know that your consumer is at the right life stage or is qualified for your product, but you absolutely have to earn their trust. Because these are high consideration financial transactions in their lives. And so I may have the best data on my member, but if they haven't had a great experience and they aren't loyal to my business, they'll probably shop elsewhere for their loan. So at SoFi, we are passionately focused on our consumer loyalty. And so our net promoter scores now are in the high 70s, rivaling USAA, which, as I'm sure you know, is considered the benchmark in consumer financial services. So at the same time and in parallel path with investing in better insight into consumers' life stages and their underwriting and credit worthiness, we are investing significantly in ensuring they have a fantastic experience, so they'll consider us for their future products.
Brilliant, thanks, Aimee. Kathryn, similar question. Your business seems to be also picking up a lot of additional information from social media. How do you go about getting access to that data? And then, do you continue to monitor that data after loans have been given?
Yes, so the way our customers give us data is it's through this authentication and authorization process. So it's a lot like login with Facebook. They come to our site, and let's say they want to give us access to QuickBooks. We pop them out to Intuit, they log in, they authorize Intuit to share their information with us, and we get a token that we can use to continue to access that data, not just at the point of origination, but actually on an ongoing daily basis. So every day we're basically continually underwriting our customers. And so that's really important because we do provide a different type of product, a line of credit product. Most small business lenders provide installment loans. And so in this way, the businesses are able to borrow what they need when they need it, and they know that they can come back and borrow whenever they have an opportunity that arises. So for us, it's important because we maintain that level of customer engagement. Our customers borrow from us 6 to 7 times a year over a 4-year period. That's as much history as I have today. But it creates a better customer experience, which is what we're talking about here, and I think that data is what gives us that experience. Our NPS is not as high as SoFi's. We're in the high 60s, but we're very excited about the way our customers feel about the product and how they interact with us, and I think that's what's caused, like ZestFinance, we're also licensing our platform to banks. We are live in Australia today, and in the UK, we're launching with the global bank in mainland Europe next month, and then we'll be in Latin America with another large global bank next year. So the banks are trying to take this customer experience and this data and the different way of looking at data, I think, because they know that they have so much information about their customers that they can bring to bear on that relationship.
That's great. Thanks, Kathryn. Rohit, your business is more of a service provider. Can you talk a bit about how that differs to perhaps Kathryn's model which is, I think, committing, the firm's capital. And I think you have a scorecard as well.
Yes.
Can you talk a little bit about how the scorecard works?
Yeah. So we are a true marketplace that we don't take any balance sheet risk, and we have different set of lenders, including both banks and non-banks, who actually participate on our marketplace. And what we take care is a fully automated origination to underwriting to servicing piece, which is also fully automated. And we can provide different kind of products, anywhere from 6 months to 5 years. We can go anywhere from $15,000 to $20,000 at the lower end, and can go up to $5 million. And we have also started adding products in the commercial real estate and equipment financing also, because we see there's a lot of opportunity and there are a lot of gaps in the market, while we have a lot of rich data on the customers. And what we have done is, the way that we collect data from the customers is that we want to give something back to them. We really want them to get more educated, and I think that's the key. So in last 5 years, we have built multiple products. One is our Biz Analyzer scorecard, which is actually a virtual CFO tool where every single business owner can come in, and whether they get a loan or not. And a lot of them actually just use that for managing their business. They can benchmark their business. They can, connect their payroll accounts and their business banking accounts, and they can see every single line item by line item, including the NSFs, including, and they can divide their businesses, and they can see their cash coming in and cash going out, and they can even, put out all the markers that how much of money is going in rent, how much is going in utilities, how much is in payroll, and then they can benchmark their businesses with other businesses. So we have found that as a very sticky platform for a lot of business owners coming in and, using that. And then once they can qualify for any financing product, we actually go and, preempt and actually, offer them instead of they having to come to us. So I think we are finding that to be a very interesting strategy. And as Kathryn was saying, more and more banks are coming to us and saying that they want that kind of a virtual CFO tool, because it's all about retaining your customer, because you might not be able to, and knowing your customer both. So KYC is extremely important for banks. And by offering them this whole virtual CFO tool, and by offering them the ability to map their business, including their personal credit scores on a regular basis, we collect wealth of data. And we are also making them more informed. So what we are trying to do is that we are trying to demystify the whole underwriting process. So we will tell them upfront that if their score goes from this point to this point, they will be able to get a product at a certain price, or with certain asset class, they will be able to get a bigger loan kind of stuff, which they might not be able to get just on their cash flow. So the whole idea is that if they give us more data, we should be able to give them back a lot more than just credit. And I think that's where the industry is moving towards. More and more of these things will happen. Prosper recently acquiring BillMe is an example that if you give back to your customers market intelligence and you make them more intelligent, more of them will come back to you, more of them will actually trust you. And then from a life cycle perspective, it becomes very good. Our renewal rates on our platform are already 68%. So anybody who borrows money will borrow again. So that already is a testimony. And then we have launched multiple products, multiple loan sizes. And the whole idea is that if we become more intelligent, we have to make our business borrowers more intelligent in lieu of that, and give them the ability. And that scorecard is very interesting, because every month they get a new report, they get an alert, they get to see what is changing their scorecard, and all that is totally free. So they don't need to be a borrower, they don't need to be doing anything else on our platform. And I think we have over 225,000 customers on that platform, and we are adding another 8,000 to 10,000 new customers a month. And that's a great acquisition tool also for us. While we spend a lot of money in updating all the data, it just helps the business overall, and also it results in much more happier customers and much more informed customers. And I think that's the key point there.
That's great. Thank you, Rohit. Michael, I left you to the end because you're actually probably in the hardest job on this stage, because you're looking to make investments in folks like this, and there's a lot of capital around at the moment. Can you talk a little bit about what you're looking for, from an investment approach and criteria? How important is it for you to look at companies that have a big data and technology strategy?
I mean, I think having a big data technology strategy is sort of table stakes at this point. I don't think anyone out there without sort of some deep analytical capabilities, or maybe I'm shooting myself in the foot, but I don't think there'll be a winner. I think it's also interesting, the marketplace lending overall has grown tremendously these past few years, but it still has a ways to go. If you look at it of the overall loan market, it's a fraction. So I think there's still a lot of winners out there, and I think it'll also be interesting to sort of see as the ecosystem matures. You'll see probably some interesting plays around tools and infrastructure for institutional investors. So order management systems, secondary markets, those types of things that you see in the more standard loan market. You'll start to see those types of things emerging as well. So I think there's some interesting opportunities there too.
Great, thanks, Michael. So we've got a few minutes before lunch. Are there any questions from the audience? At the back, if you could speak up.
I grew up at Capital One. We've used, what the intention behind the funds has been an important credit driver, underwriting driver for a long time. We find it's pretty powerful. If somebody wants to refinance a loan, for sure that's going to be a positive credit signal.
How about as far as using it as far as products go? Is somebody buying jewelry more likely to default than somebody using it for repair?
Sure. So we see. I'm sorry, I misheard your question. We see risk split somewhat across different against different categories of what they're going to use the funds for. At this point, we're still playing with some pretty broad categories.
In the middle there.
Hi, for you. Your CFO tool sounds like a treasury management workstation. Can you just expand upon the difference between your tool and what's offered for treasury management?
Yeah, so our tool, what it's doing is that part of it is treasury management, part of it is benchmarking also. So the key thing is, while you can manage your cash flow, your revenue projections, you're also seeing how your business is doing, because for a lot of small businesses, just balancing their account receivable and account payable is a big challenge. A lot of time they will set up auto pays for account payables, and let's say their payment gets delayed. They're paying a lot of overdraft fee, they're paying a lot of money, and Dodd-Frank doesn't really cover small business overdraft fee. So banks have actually increased the overdraft fee by so much more in this space. So the whole idea is that, how can I, because as a small business owner, really I'm looking for three things. I'm looking, how do I grow my business or sustain my business? How do I run my payroll on a timely basis? And how much money I'm making at the end of the day? So our whole aim was that a lot of treasury management tools were providing only a slice of information, and they were not actually benchmarking you against other businesses. And they were also not breaking it down into different things that was really important for you. So for a lot of retail businesses, rent information and what is the percentage of rent of your revenue is more important than a lot of other things. For a lot of wholesale businesses, it's the inventory turnaround time. That's where all their money is stuck. So what we went out to do was that we said we should have multiple products. So we built out a virtual CFO tool. We built out a small business lending index. We have actually built out a lot of data reports by your age of business, by region, by revenue. Even if you're a woman entrepreneur, let's say you're whether you are in the top 25 metropolitan areas in the country from growth perspective or not. So the whole idea is, and whether you are in areas where there's a big seasonality of business. So like, let's say you're in Florida, there will be seasonality of business, especially in retail businesses. So how do you map that? So there's an ability for you to do treasury management, there's an ability for you to benchmark their business, and there's an ability to get the right recommendations of what you should even look at. And I think that's the most critical piece, that once you combine all these different elements, then it becomes very powerful. And then the more the people use it, and more number of people who use it, the tool becomes better every month because we have more data coming in. So I will give you a very specific example. We finance a lot of gas stations. And over last 1 year, we have seen, how gas prices impact the margins of gas stations. So that's very interesting and fascinating. We are seeing China slow down is right now impacting the diamond industry, a lot actually. So not many people realize that, that's going to impact. So the key thing is that if we have a gas station owner or a diamond industry guy, we will actually recommend them the right steps, next steps, what to do. In case of diamond industry, we are actually recommending them not to borrow any more money right now, because they will not be able to sustain the cash flow. And this year is going to be very tough for a lot of them. So the whole idea is that, you become so intelligent and you actually start recommending them the right steps on top of it, and not make it a vanilla product. It should be customizable according to their needs, but also intelligent products that what they should customize, somebody should be recommending them. So I think that's why we call it as a virtual CFO tool and not as a treasury management tool.
One more question and then we'll break for lunch at the back there.
Hey, good morning. Kevin Curtin. Good morning. Kevin Curtin from Summit Partners. Rohit, obviously very interesting way to use data kind of outside of your core product as a value add to customers and potential customers. For some of the other folks on the panel, have you thought about or begun to explore ways to monetize or derive additional value from the data sets that you're building that are, frankly, very valuable from the perspective of the incumbents in verticals maybe that aren't just clean financial services?
I mean, I've got an answer to that. Talk to me, because I think quite a lot of this data is of huge value back into the more formal markets. But who would like a go at that?
I'll give you an example of something we've talked about doing but haven't. We started our business making loans to eBay businesses 5 years ago. That was where we got our start. Today, online retail represents probably 20% of my portfolio. But what we learned is that eBay data is a huge indicator of the performance of the actual brands that are being sold on eBay. So if you see a huge uptick in demand in a secondary market, if you will, for a certain camera manufacturer, then that actually bodes well for that camera manufacturer. So there are ways that you can translate some of the data that we're collecting into some other industries. I mean, I think that's still probably pretty much financial services, and we've talked a lot about showing our customers their data so that they can make better decisions about when to borrow and how to use the funds and when not to borrow. But I think we're all so focused right now on growing our core businesses that we're not thinking about how we can sort of license or sell that data. I think the demand that banks are showing for licensing our tools and technology, frankly, is really telling, and it speaks to how difficult it is to to gather and make sense of all the information that we have.
Any other comments? Aimee?
I would just add that we have such tremendous opportunity ahead of us in our core consumer lending lines, as well as looking toward the future with additional products that our super prime customers want, that we're focused right now on building those out. But certainly we wouldn't rule that out in the future.
That's great, and I encourage you all. We work with a lot of very mature businesses, and they didn't really ask permission to be able to at least aggregate data. So I encourage you, in those long terms and services and conditions, just include a line in there that says we reserve the right to aggregate your data and sell it. That would be great for the future discussions. I think that's it for this panel, so please enjoy the lunch. There's going to be a bit of a crowd at the back, so take your time. And we'll, I think we reconvene in about 45, 50 minutes. Thanks.